Morning all, how are we doing? Hi. Weird lights in here today. How are we all doing? Sorry, always late on a Thursday. Gym day. Morning, Lace Ron. Hope I said that right. Morning, Christian, Amy, JC, Peter, Paolo, Faginia, Day Trader, Andres. How are we all doing? Motning Pop Pickers. You mean morning? How you doing? Right, let's have a quick look at where we are with everything. I'm absolutely destroyed this month. I've given up this month. Reset. Need an analysis this month. As you can see, this pound US dollar is killing me. This dollar is killing me, basically. Cannot get out of this squeeze. This has been the worst, probably, I have to say, the worst squeeze I've been in ever. And it's not really a squeeze either, which is the worst thing about it. Where's my pen gone? Squeezes tend to be fast, violent moves like this. That's a squeeze. Yeah. Look at the speed of the drop and look at this tiny pullbacks that you get. Yeah, that's a squeeze. That's what is a position trader's enemy. Yeah. What we've got on the pound US dollar at the moment is more of a grind rather than a, it's not that, is it? It's this kind of, I've never been through a period of sustained 2-month movement like this, where we are just not getting any market movement in the opposite direction. There's no profit take moves. There's nothing happening. It's just basically grinding, and that's what's killing it this month. Well, since October, isn't it? I mean, sorry, October. Since August, the whole of August, we basically got that. Yeah, so we started off with the drop, fine, not a problem. We got a completely sideways move, and then we've had 2 news events which have completely flipped the bias on this, completely the opposite way. Yeah, so not a lot we can do about it. So I'm going to give it today. I've had 5 attempts now at aggressive drawdown control on this, all failed. That's enough. I'm not doing any more. I am doing more. I've got 1 more today. And I will add to this aggressive position down here to try and exit it. If it's not exited today, I'm taking a 5% loss on it. I'm just going to get out. Sometimes you just have to pull the plug. I've done it with oil. I did it with Aussie New Zealand a year ago-ish. And I'm going to have to do it with this. So this is just one of those things. Every now and again, you just have to pull the plug and protect what you've got. So we'll have an analysis of, I'll probably do a video on this one, actually, because it's a really good example of a squeeze. I've got one on the website at the moment, already, I think. How to survive a squeeze. There, that one. So it's worth going to have a watch. But that doesn't show you the worst case scenario, basically, which is kind of what we've got at the moment. As I say, not traded through something that's been this aggressive down. If you look at this on the weekly chart, yeah, this is weekly candlesticks, yeah. It's so unusual to get that continued movement with 0 green candles. Yeah, we do get it happening every now and again, but you tend to find you get a lot of pullback in it. See that candle there? That although it's a doji, you've got a big push up and a big pullback, which gives you opportunities to get out of the trades. We just haven't had it because we've got this stupid accumulation in the middle of it. So what can you do? Sometimes you got to take a loss. So today we've got one saving grace, which is we've got the SMB rate this morning as well. That's going to affect the DAX. So we'll see what happens with the DAX this morning. We've got a gap down, but we'll see what happens. So 12 o'clock today, we've got the bank rate. Bailey's not doing a press conference, which is, I think, the wrong thing to do. We've just had CPI come out lower than expected. And now we've got an expected interest rate rise to 5.5 today. If they stick that at 5.25 without telling us why, it's going to really, really screw the market, because the market isn't going to know what to do with this information. There's a lot of talk. It's basically a 50-50 shot now as to whether we're going to get the 5.5. It's pretty much written in stone 2 weeks ago. All changed again. and especially with what the Fed said last night, which again, we might do, we might not, we might do. It's all you get basically at the moment is total confusion. And obviously, as you saw from the market, they were like, oh, right, so you are going to raise the interest rates again. Oh, you're not going to raise them. Oh, you are going to raise them. That's what we basically got out of FOMC yesterday, wasn't it? And now it's going, are you sure about that? Nobody knows which way anything's going. So we'll see what happens. If this comes out as a 5.5 today, the market is either going to have priced that in and we will get that continuation move up now, or it hasn't priced it in, or it will try and price it out if it gets a 5.25. So this could, I think, today do exactly what we had out of FOMC yesterday, except with the pound, we should get a continuation because that is not going to be the terminal rate for us. We're at 6.7% inflation. It's too high, 3 times high. I'll double the inflation that we've got in the US, and their rate is basically the same. So there's a lot more work to do with us. So we'll see. But so plan today, I have a pending order for an aggressive move. I'm hoping that will trigger before 12 o'clock so that I'm in the position, because if I have to trigger that on the news and the news is a spike, I'm not going to get filled until up there because it's going to slip like crazy. So I want to try and get filled on this beforehand. There'll be a stop under that area there. And if we do get a move down and it doesn't pull back within a couple of hours, I shall be jumping ship and taking around about a 10% loss this month. Nothing I can do about it. So just one of those months, unfortunately, where you've got to jump ship. We'll see, though. Look at my average on this. And this is the only thing I'm in trouble with at the moment, literally. But it only takes one instrument to go wrong, as you know. So I'm up at 200% ADR. That extra position there will drop my average down to around about 150. 150 ADR off of a positive news event is dropping the ocean. We could be up at 225 off the back of this. So having an exit there today would be absolutely perfect and minimize the loss for the month, basically. But I don't hold up much hope for this month. And then I'm going to do an analysis on it and just pick it apart, really. You've got to learn from these experiences when you get them. You never stop learning in this industry. Trust me, I've been learning for a long time. Right, so got a gap down today on the DAX. We had a drop across all indices off of FOMC, as you can see. So NASDAQ, big drop. Dow, big drop. S&P, big drop. Yeah, DAX, obviously not quite as big a drop because it's not a US index, but still a drop back nonetheless. So got the gap fill to do this morning. So that would be first target to the upside if we break high. If we break low on the DAX today, which is what we were looking at as a scenario yesterday, we were looking at this level and this weekly level here. So we've got a weekly low and a 2 weekly low, both in the same place. So from a downside perspective today, that's your bottom for a bounce, which is around, well, it should be somewhere, there you go, around about 5R to the downside. So that's basically the short play today. Oh no, I turned it off. Don't matter. I turned the EA off yesterday because I was manually handling a trade and I didn't want it to do something. So if you, the pre-market 15 is basically on the pre-market high, isn't it? So your pre-market break today, you will have taken a short on the 15-minute pre-market. You triggered short already. If you haven't taken that and you're waiting for the 5, obviously wait. But I'm not in that because I forgot I turned the EA off. I prefer an upward move today anyway. So yeah, so there's plenty of downside movement down to this double bottom here, which is 4-5R from that pre-market break. So that weekly low down there, it's around about half an ADR. So, it's well within that range. Upside, obviously, we're looking at the gap fill, and then it would be ADR, which is also yesterday's high to the upside. Now, bear in mind, 8 o'clock this morning was it 8 o'clock? 8:30, sorry. I thought it was half an hour after the open. 8:30, we've got the SMB rate. That's going to have a big impact on the euro. The euro is what the DAX is priced in, so therefore we're going to get volatility in the DAX. So bear in mind, we've got that coming this morning. So there's a good chance that we might just get a little bit of a rotational move this morning while we're waiting for that news at 8:30. So don't expect a massive break today. So it might be a tricky one to trade. Again, you know, I've got to go through all this analysis on the opening range breaks and visually look at them all, but we know that on news days, they're not good days to trade. And we've got a very big news day today. So you either need to make your money pre-market and get out and be done by the news, or just exit by the news, regardless of what your position is. Just get out before the news. If that news goes the wrong way, that's going to really hurt. So, right. So we'll wait for that, see what happens with that. We've got 2.5 minutes to the end of that candle. There's your 5-minute break so far. So you are short if you have taken the pre-market. There you go. So there's your pre-market range, that green one there. We've got that pre-market low. And we're driving straight into yesterday's low. So if previous day's low. So if that low breaks, there's no support until we get back down into this double here. Yeah, we got that little wick there as well. But it's that whole zone, basically, is where we're going to find buyers stepping in. It's whether or not there's enough of them. And obviously, we're in a range, as we know. With the DAX, we've been in a range for absolutely ages. It's interesting. I was reading some commentary yesterday on a financial website on Interactive Investor, and it was an interview with a hedge fund manager, who's obviously hedge funds do a lot of position trading type strategies because they manage a lot of pension funds, and is saying the return over the last quarter is probably the worst he's experienced in his career as well. So it's nice. I said yesterday afternoon's live room, I went out and had a look at some other traders that I think are pretty good traders, just to see how they're getting on, because it's always good to compare yourself to your peers and obviously have a look at what's going on in other people in the industry. Everybody's going through the mill at the minute, and it's nice to see that it's not just you, because it gives you confidence that you're doing the right thing. Even though things go wrong, you're doing it right, and there's nothing you can do about it. This thing is random. It will do what it wants to do. You have no choice but to take these hits. So it's good to see that I'm not the only person, and the hedge funds are also sitting there going, this is a hard quarter. So not helped by the Fed yesterday, which we will all pick apart in a minute. The Fed yesterday, basically everything that came out of his mouth yesterday was confusing, contradictory, and absolutely no use whatsoever to anybody, basically. Not that we expect much more from the Fed, but you just have this hope every time that he's going to go back to the old days of, I can now print money and move the market. Not happening at the minute. And I think one of these in here, one of these red ones in here, I was reading it last night as it came up, and I was like, that sums it up. And it was pretty much something along the lines of, I can't remember what it was, but it was confusion, basically. It's something along the lines of, we're not sure. Right? If you're not sure and you're running the finances for the country, who is? Yeah, give us a bone, Fed. But anyway, we'll go for that in a minute. So there's your 5-minute opening range. Break is to the upside off that 5. So there's your 5-minute ORB, and that is broken long. So looking for a gap fill to the upside if it goes that way. But I wouldn't be surprised to see us do this kind of thing this morning until 8:30, and then 8:30 we're going to get a move, one way or the other. Let's see. Right, let's have a look at what we've got to play with today. Let me just catch up on the chat. Morning, outro. First day back trading. Good. You've missed most of the hell probably then. Morning is Matt, Kennelly, AZ, Jerry. Do you also hedge currencies? No. Although I'm thinking about it now. Morning, Daniel. Morning, Ty. Gold. We'll have a look at that. Well, gold's a US dollar cross, so I can tell you what that's doing now. Not a lot. Same as every other US dollar pair. Confusion, delay. No idea. Yeah, look at all the US pairs. Yeah. No idea what they're doing. Absolutely no idea. Although that, we need to look at the news in a minute and see what happened with Japan last night. Did I get out of the Aussie US shorts yesterday? I did, yes. So the Aussie US short was straight in, straight out there, although I wish I'd have held it. Do you see what I mean? It's one of those months where you just have to go, stand back and go, it all went wrong. There's nothing you can do about it. I've done everything I've done for the last 5 years in exactly the same way as I've done it. However, the market this month just went, nah, you're not having it. It does it. I accept it. It's done it to me many times before, and I know that next month will be a totally different experience. So you just got to get on with it. You're always out too soon. You're always in too soon. The way of the world. That's how it goes. But yeah, got out of that yesterday. So one of the things I'm looking at, this new EA that I've built, somebody, actually a couple of people, but one person in particular has been contacting me about the new index hedge EA that I'm doing all this testing with, about applying it to Forex. And it's specifically after one of the comments that I said yesterday with, I can't remember which session it was yesterday, but with regards to getting out of trades that go wrong. Yeah. So for example, this one here, we get out the long and then we need to get out the short. So we take another short. And if that short fails, we re-hedge. So you're double hedging basically. So every time a trade goes against you and it's not working properly, you re-hedge it and you lock in, you just keep locking in loss and you just keep taking profit and wait for the pullbacks to come. And so it's very similar to position trading, except you don't do drawdown. What you do is you just lock in drawdown. Yeah. So I'm going to build a model with this EA to test that theory as well. It is something I've looked into before, but I got waylaid and distracted and went off elsewhere. So I will look into that. DAX isn't going anywhere. But we'll have a look at the ADRs. The RSIs as well are flat now because obviously we had a lot of movement undone yesterday that we had. So I banked a lot. Believe it or not, I banked a lot yesterday. Making that 5% loss yesterday, I actually banked a lot of profit. So imagine what the profit would have been. That's drawdown done today on the pound US dollar. So that I had additional drawdown controls on last night, which I left overnight to see if we could get any overnight movement in Asia. Just stop me out. That's what happens when you put stops in the market overnight. You get stopped out. So we'll have a look at the ADRs and the RSIs. In fact, let's do the RSIs now because there's only two. Pound CAD H4. Yeah, extended on the 4 hour. Been extended on the 4 hour since back here, which is when I got into the hourly. So 2 positions on that one, long at the moment. Hopefully be able to get out of that today on some pound movement. Pound US dollar, we know about 4 hour RSI extension. Well, yeah. So that's not really doing much at the moment. We have tapped into though that level I spoke about, right? So this is the level we looked at yesterday. We've tapped into that level quite nicely, and we have got some buying out of that level. So although that means absolutely nothing in light of a fundamental shift coming this afternoon at 12 o'clock, does it? So regardless of what that is and how many buyers are sitting at that level, if the market wants to drive that through there, it's going to drive it through there. So it's an interest rate move. So yeah, but yeah, we are finding buyers down here. So we've got some help on our side anyway. So that's all you've got on the RSIs at the moment, just those 2. ADRs, there's quite a few to look at. The Australian dollar's had a very good move overnight. Well, not a good move, but it's moved a lot. It's obviously moved down. So news-wise, there was no news overnight specifically from the Aussie dollar. We had the GDP coming out as a positive for New Zealand. So if you look at the, if you look at the New Zealand dollar, yeah, again, as I keep saying, what we get given with this news is not what we get given in price action at the moment. We're not getting the right movements. Positive news on the New Zealand dollar. 100% ADR moved to the downside because their GDP has gone up, which is positive, right? Positive for the currency. So the New Zealand dollar pairs, yeah, all coming down overnight. Yeah, Australian dollar gets dragged with the New Zealand gets dragged with the Australian dollar. So we've had all of this movement down. But again, all we seem to experience every time we get a news event now is a drop and a retracement. So these are all really good ADRs today. Look at the pound yesterday off the CPI. Yeah, total collapse. Bang. I've just got out of the pound odd this morning. Okay, so that 3% loss that I've got running in there today, that actually includes profit as well, 2.5%. Yeah, so there's another pound odd exit. There's a positive. So yeah, all these moves that we keep getting just get undone straight away, but we don't get any continuation on anything. Yeah, so all these Australians today, Aussie dollar CAD, ADR hit, 5-minute reverse alert has already triggered. Lovely looking long. Absolutely no reason why it won't do a V-shaped recovery today. Yeah, so good long opportunity there. Aussie dollar Swiss, ADR, reversal alert. There's your W pattern. There's your retest, in, up, completely undo that move. All on the cards today. There's no reason why it won't. It's done it every other time. Out of my Aussie dollar yen short. So that Aussie dollar yen short is a target hit. So that was an RSI extension, H1M5 mean reversion yesterday, straight in, straight out, done. So I mean, if everything is going absolutely perfectly and absolutely fine, apart from the pound US dollar, that's caused that. If that pound US dollar, and this is somebody actually posted in Telegram yesterday. Was it yesterday? I think it was yesterday afternoon. Been position trading, first month doing it. He's 11% up position trading this month because he's missed this squeeze. Everything else is going absolutely fine. Look at it all. There's nothing in drawdown, and I'm banking tons absolutely perfectly. No problem. Everything's going perfect apart from this one thorn, which is causing this month. So, you know, if you didn't take the pound US dollar 2 months ago, you're probably having a totally different experience, aren't you? So yeah, Aussie dollar yen, again, potential move up on that one. We'll have a look and see what the yen intervention news is overnight. But long on, so I got out of the short on the Aussie US, took another long on that one this morning because I've already got a long on it at the moment. So Aussie US long opportunity, 5-minute reversal. Whoops, 5-minute reversal alert. Just kicked in down there. There's your W pattern. Beautiful retest off of propulsion, look. Yep. So there's your breaking structure. Propulsion gap retest off. Propulsion gaps filled. Selling pressure coming through. Usual stuff. Euro New Zealand. Reversal alert, 125 ADR. Yeah, there's your reversal alert. That's selling off really quick now. We've got 15 minutes until the news. So the Euro New Zealand, obviously, you've missed that. These Euro pairs are selling off ahead of the news. Yeah. So we've got the Swiss franc interest rates coming in a minute, in 15 minutes, which obviously will have a big impact on the euro. Look at that for a resistance pound. Beautiful. So Euro New Zealand, that's already happened. You missed that one. There's your 5-minute reversal. That's coming down very nicely. Pound odd. Reversal alert. That's 125 ADR. There's your move there. Pound New Zealand. That's pretty much the same as the pound odd. Probably best not to take both of those. Reversal alerts just kicked in on that one. Move down. New Zealand dollar Swiss. Again, be careful with these. Anything you're taking on the euro and the Swiss franc, if you're going to take any of these ADRs, just be aware in 15 minutes it's all going to go nuts. So, but that's come straight off of ADR. Really, really nice reversals today. It's lovely to get a big stretched move in the Asian session, because as soon as the volatility kicks in London, obviously, they undo the whole thing. Be careful of this one. Pound New Zealand dollar yen. We'll have a look at the news in a second, see what's happened overnight. And New Zealand dollar, US dollar, ADR hit, W pattern reversal, off we go. So potentially all of these New Zealands and all of these Aussies, which is every single ADR today, is a New Zealand or an Australian cross. All V-shaped recoveries on the cards. No reason why they won't. Everything else is doing V-shaped recoveries at the moment, so why the hell not? So yeah, either go for a quick scalp on them or try and hold them. So those. We'll have a look at the news. Let's go back and have a quick look at what the DAX is up to. So DAX just pulled back inside range. So if you took the 5-minute, you're long at the moment. Obviously, if you took the 15-minute pre, you'd be hedged or you'd be stopped out. But that's not going anywhere until the news comes out. So news today, obviously, we've got a lot coming out today. We've got the SNB in 15 minutes. That's forecast a bullish move. We've got the SNB press conference, which will be happening shortly after. The Swiss don't hold press conferences very often, so this will be an interesting one. I've got a feeling they're going to say we're not going any higher with our rates. The Swiss are very good normally, which is why it's a safe haven, normally keeping their economy and everything ticking over nicely. They're a very, very wealthy country. They don't have a lot of debt. They have a lot of investment into them in the banking sector. So they don't have much problem with anything. As you can see, their unemployment is tiny. It's only 2%. Their inflation is 1.6%. Compare that to the rest of the world. Yeah. Target is 2% for the rest of the world. Their target is nothing. They're happy just to be as they are. So 1.6 is well under our targets that we're trying to get to and failing because ours is going up. Their interest rates have been flat and negative for years and years and years. So for them to go up to 2% is a big step, but 2% is enough to drive this down. You can see theirs isn't even moving and they're not even at 2%. That's where most of the world sits as a norm. So I'm not expecting them to come out and say we definitely need to do more. They're pretty much on the ball. So we could get a negative reaction off of the Swissy, depending on what happens in the press conference. But the interest rate rise should be bullish. So we'll see. So we got that coming this morning. We've followed that by 12 o'clock. We've got the rate for the pound. This is going to be a real hit and miss announcement today. It's been a pretty much nailed in 5.5% for weeks. We've had very little coming out of the Bank of England, but yesterday the CPI figure came out unexpectedly drop rather than increase. So this 5.5%, Bailey may take a decision, or the board may take a decision, that it's not actually required, this 5.5, because we were expecting it to go up and it's come down. Yes, it's only a 0.1% reduction, but it's a reduction. So what he's trying desperately to avoid is us all defaulting on our mortgages, because this is the main reason our housing market has dropped 5% so far year on year, because we can't afford mortgages anymore. When you can't afford to buy a mortgage, i.e. the house pricing stock is outside of people's availability, the only way you can get the housing market moving is to drop the prices. So the more he increases this, the more difficult that becomes, the more people become homeless, the more repossessions there are, the more the banking sector declines and everything contracts. So they're trying desperately to find any reason not to do that. That also has a massive impact on unemployment. And if you look at the pound unemployment at the moment, we're currently sitting at 4.3 and it's going up. Yeah, so we need to stop this going up. It's too high. So anything they can do to keep that as a 5.25, they will do. And now that the inflation figure has been a negative, they've got a reason not to increase it. So there is a possibility we'll get a downturn in the pound today if we get that 5.25, because the market's been factoring that in for weeks to be an increase. And the market's been coming down. Now we've got that. You saw the reaction we got. So if we don't get that 5.5, I think I may be taking a loss today. So we'll see what happens there. That's very important. We've got unemployment claims at 130 for the US. So if that unemployment figure comes out as a negative, i.e. a green number, we might get a retracement on, a red number. If it comes out as bigger and a red number, we might get a retracement on the FOMC move yesterday. See? And then we've got Lagarde speaking later on today. So she might try and rally the market a little bit as well. So it's a very, very big news day today. And then tomorrow we go into the monetary policy for Japan. Very rare we ever get anything out of them. However, there will be a lot of talk about FX movement during that monetary policy statement tomorrow. We could get an intervention off the back of this. You know, if this US dollar pushes any more today, they're going to be screaming and shouting to get the yen rallied. That won't go up because that hasn't gone up for 6 years. Yeah, negative 0.1 is what Japan's interest rate is, has been, always will be. Yeah, they do not change their interest rates. If that was to change, then all hell's going to break loose. Followed by retail sales. We got the press conference and then obviously all the PMIs tomorrow. So absolute manic at the moment for news. So we will have a look at the fallout from FOMC in a sec. Just see what the DAX is doing. We're just sideways at the minute on the DAX. Not going anywhere. Morning, Mumo. Nice DAX whipsaw. Welcome back to the jungle. Yeah. Franco, no disrespect intended. Is drawdown control the only difference from grid trading? Martingale light. No. Grid trading's nothing to do with position trading. The only similarity between grid trading and position trading is that you add to losing trades. You scale in, yeah. But grid trading is exactly what it says. It's a grid. So, for example, using this as an example, yeah, you can see the grid of reward here. Yeah, actually, ADR is a better thing to use as an example. Yeah, so if you use ADR here, a grid is basically where you take a trade there, 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 and you take a trade there. Okay, so price pushes up, you take a trade. If price continues to push up, you take another one, and you take another one, and you take another one. Can you see the problem? Yeah. What the hell are you taking trades for when this thing's going parabolic? Yeah. Position trading, we use market structure to enter our positions. So if the price continues to crash like that, we wait for the buyers before we get in. We take a position. So if your first position's there and there's no buyers in sight until we get down to here, that's where you take a position. We don't take trades just because the price is pushing against us. We take trades when the market should shift. Yeah. Grid trading, you would take a trade. If this thing pushes 225 ADR against you, you are going to be in 6 positions for no reason whatsoever, apart from the fact that it's gone up. Why would you take a position just because price is going up? You need some reason for it to tell you to take a trade. Yeah, this is why grid trading doesn't work. You get a massive spike. All you do in a grid trade is just lose an absolute fortune for no reason. Yeah, position trading is different. What we're doing is we're dollar cost averaging in the same way as the banks and institutions do into swings. But we do not get into swings unless we are getting some signs that the big boys are starting to move. So this is why you use the market reversal alert indicator. We need a reason or some kind of sign from the banks that we're actually stopping this move now. So we may well be reversing. Yeah, market reversal alerts. So that's the difference. And martingale obviously is crazy. Martingale is you're just doubling your lot size, crossing your fingers and hoping it comes back. So let's say you martingaled this. The initial position, I don't know what the initial position is because it's had drawdown control done on it, but it was probably about a 0.6. So if you'd have taken a 0.6 there, a 1.2 there, a 2.4 there, a 4.8 there, a 9.6 there, a 17.2 there, a 32.4 there. You can can see, you're dead. Do that. Yeah. So, yeah, that's a massive difference. Go and watch the Bootcamp, Frank. You must have watched the Bootcamp by now, surely, multiple times. Yeah, grid trading. This is why everybody says, you see these EAs out there that give you these lovely profit curves and go, no grid trading, no martingale, because everybody knows that grid trading and martingale are suicide. Don't do it. You will die. Right, let's have a look at FOMC. Actually, let's have a look first of all. Let's start at the top. Oh my God, Powell is speaking at 8:13 in the morning. He must be asleep, surely. Wow. Okay, Powell's been speaking this morning. A soft landing is the primary objective for FOMC. I wouldn't call a soft landing a baseline expectation. This was all said yesterday. It's prepared to raise rates further, decided to hold rates. This is some kind of glitch in financial juice. These comments are all, I read all these comments last night. Something's gone wrong, so ignore that. So I just want to quickly check overnight news. Maklov, this was all said yesterday as well. Something going wrong with financial juice. They're replicating news. I just want to see what Japan said overnight. I expect the Bank of Japan to closely communicate with the government to continue to take appropriate monetary policy. We will respond appropriately to FX moves. So they are still talking about the FX moves. So this move on the yen that we got yesterday is worrying the Japanese. We broke out of this 148 level. If this US dollar doesn't come down today, the Japanese are going to think very, very strongly about an intervention move, which will be a 600 ADR move down. So they are talking about it still, which is good. And they will continue to talk about it, and they will continue to threaten this until they drop everything against the yen. So until people start buying the yen, we're going to get this. We've got the monetary policy statement from the Bank of Japan tomorrow morning. So, sorry, Friday morning. So, yeah, it's Friday. It's Thursday today, isn't it? This could be the danger zone. This could be the danger movement. We could get a big, strong move in the yen tomorrow. So we'll see. Let's just quickly whiz over to the Swiss franc. Is this the pound dropping? No, this is the Swiss franc powering up. So the Swiss franc is already on the march. We haven't even had the news yet. 20 seconds. Let's watch US dollar Swiss, because that's probably a better gauge. We'll see where we go with the Swiss franc. Let's get the DAX up. Oh, brilliant. That's good. I've just been hedged on the DAX just before the news. Cheers, DAX. Seriously, reset this month. Couldn't make it up, could you? Okay. Very, 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 very weak Swiss franc. I would suspect they haven't increased the interest rates. Let's listen. 1.75. They didn't increase. Didn't increase. That's weak Swiss franc, weak euro. Oof, euro's not moving. It will. There we go. Right. So Swissies decided not to increase interest rates. As I said, their inflation is not any danger whatsoever. So they decided not to do it. Bye-bye Swiss franc. We'll see if that holds. 175 ADR in one candle in less than 5 minutes. That's a big move. That's a big move. Very unexpected move. Have I got any Swiss franc exposure on? Long on the Swiss franc. Get in. Couldn't get any worse, could it? CAD Swiss going into drawdown. I think we'll see if we can get a retracement on this CAD Swiss move. But I think what I'm going to do is I'm just going to close everything out today and just get flat and take the rest of this month off. This market at the moment is too dangerous for position trading. It's not doing at all. We're at such a dicey level with these interest rates. It's not doing at all what it's programmed to do at the moment. So there's no point in taking any more than a 1% loss on that. So if this pushes and doesn't pull back today, I'm just going to shut that down as well. I'm going to wait until the pound news has come out though, and wait until because we might get a move off the pound. However, the way this thing's going at the minute, I'm just sort of expecting it not to. So better to put the powder away, keep it dry, and start shooting again next month. Euro's pushing up, ADR, Euro CAD, Euro Swiss. Look at that, 225 Euro Swiss. Almost, we just missed it. Let's see if we can get that lit up. Weekly range. We've got a weekly range here. DAX not going anywhere. So just a big spike up on the DAX at the minute. So you've got a fade opportunity on this. Yeah. Everything else we've seen so far in the last month, 6 weeks that has rallied like this has gone straight back to where it started. So that's a big shock. Big shock. So if they've done it, I would not be surprised for the for Bailey to announce that today as a 5.25. So be very careful of your pound positions this afternoon. God, look at this, already coming down like the pound. So the pound will come down off that as well. We've got a lot of volatility coming in today. Probably going to get a lot of US movement as well. Be careful today. Remember I said earlier on this week, it feels like there's an explosion waiting to happen. We've got all this sideways movement and all this contraction, and all the ADRs are contracted. Everything's kind of stuck down here at the moment. We're waiting for some explosive moves to kick off. That's a prime example of what we used to get before COVID. We're getting big moves, unexpected news events that are actually finally moving the market. So this thing's ready to pop. You can obviously make a lot of money, but you can lose a lot of money at the same time. So just be a bit careful out there today, because we've had the first proper move off of FOMC that we've seen for a while. And it looks like it's going to be a continuation move by the looks of things on this US dollar. So oil as well yesterday, it started its pullback. Yeah, so we got that pullback started yesterday and continuation today by the looks of things. So everything's starting to kick in, isn't it? So there's some more ADRs for you. Remember I said as well, it's not unusual in September for this thing to be completely lit up. We've had a full house on this in September before. When you come out of summer trading months, all the ADRs are so small. Pound New Zealand, we're down at 121. We were trading at 350. Yeah, this can easily do that this afternoon off of the pound. So just be careful out there, boys and girls. Let's see how far we go on this. So we're 175. Euro Swiss is not quite got the 225, but possibly. Anybody long on that? Fortunately, no entry on it. But afternoon bunker, morning even rather. Franco, yes, very dangerous grid method. I see many doing this. Yeah. I built Grid EA. So basically, when I was developing and testing ADR, so when I built the ADR reversal indicator, I built an EA to test strategies with ADR as part of the development. So as well as doing all of the back testing and the research for 25 years into ADR, or 15 years. There's 225. First ADR hit at 225 we've had for 2 months. Finally, movement. Not the right movement at the wrong time. I tested a grid strategy with the ADR indicator. So it was basically exactly as I kind of described. Entry, 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 entry. Yeah. And I found it incredibly profitable, especially if you use a lot size multiplier. Obviously, if you use martingale, that blew immediately. Well, not immediately, but it blew, obviously. But a slight lot size multiplier, it was incredibly profitable until it wasn't incredibly profitable. Yeah. So the strategies that I tested were kind of like position trading strategies, but there was an end of day exit on them. So days like this, where you get these massive moves, what you just do is you go, this is exactly what we're talking about earlier. Prime example, yeah. Let's say you took a 1 lot short there and a 1 lot short there, a 1 lot short there, a 1 lot short there, 1 lot short there, 1 lot short there. Whatever you took, you're sitting in somewhere about 15 to 20, 25% drawdown on your account now on one candle. Yeah. If you were position trading and you'd taken a short here, you haven't taken another short yet because there's absolutely no reason to sell this. It's pushing. You don't sell it, right? So that's why it doesn't work, grid trading, because you get the market doing this. It regularly pushes very, very hard through ADR. We know that. We've seen it. 2% of the time, it goes above this level. I know for a fact 2% of the time every year, it will go above that level. Yeah. So we're expecting it to happen. Why would you develop and build a strategy that you know full well is going to have days where it's going to completely die, and trade into it? It's just, it doesn't work. So there's a lot of people doing it, but they haven't done testing. So, you can visually backtest stuff. If you were to look at ADR and you basically went and had a look at the last 2 months and looked at ADR, you would go, oh my God, I found the Holy Grail. Today, you would be going, why is this not working anymore? Because you didn't test it any further than 2 months, because we've been flat for 2 months and ADR has been absolutely killing it. Go back and do a year's worth of testing. You'll find that this doesn't work all the time. Yeah. So Euro Swiss 125 of its weekly range. Look at this, everybody. We're actually getting movement. Hurrah. So yeah, it just doesn't work. It does work for a time. Yeah. For prop, it's one of these strategies that if you want to use a strategy for prop, you've got strategies which work very, very well X% of the time, but the Y% of the time is when it blows the account. So if you're trading prop, all you're relying on is X% of the time being when you're trading. You don't care about the Y because it's not your money, do you? So they're good for prop, and you'll find probably a lot of these EAs that they sell to get you past prop evaluations will use some kind of grid strategy, because we know for a fact 58% of the time the market spends within ADR. Yeah. So if you've got something that when you get outside of the norm, you can grid into, most of the time it will work. But the times it doesn't work, if it's not your money, you don't care, do you? When it is your money, you do. So back testing. On the pound, maybe no move is already priced in, which is why there's been a drop. Yeah, so that is an option today. If you look at the pound over the last 2 weeks, more than that really, but I mean specifically the last 2 weeks, we have had obviously a big decline. So the market, what tends to happen when you've got an interest rate move coming is a week or two before the announcement, you tend to get a move into it. And this is basically the market pricing that move in, which is why when we get a news event that is unexpected, a la the Swiss franc, you get a spike, because they've already priced in the fact that they're going to get what they were told they were going to get. So all of your P&L is based around probabilities within banks and institutions. So the probability is this will happen, which will mean that currency will do that, which is what scorecarding systems are designed to tell the traders. Yeah, the scorecarding system says that if all of these things which are forecast happen, this is where the price will expect to be within a range at that level. This is how hedging works. So you buy at that level. Think binary options. If you had a scorecard in a bank and you had a binary option to take that you would pay out on in 1 to 3 months, you would get it right pretty much every time, because the scorecarding system is normally right. So what happens is you buy into the expectation. If you don't get the expectation, you have to exit that position fast, because you will lose money when it goes the wrong way, which is why when you get a news event coming out unexpectedly like this, the market dumps all of its position because it's wrong. It thought it was going to get this and it should have held that much to earn that much interest. And now it's not getting it. It needs to excavate those positions and put them somewhere else. So when you get a Swiss franc move like this, where we've got a sudden massive movement, that money that is coming out of the Swiss franc has to be put somewhere else. Yeah, so you'll find there'll be other instruments that suddenly move. Typically, it's not happening at this time by those things. It tends to be something like the yen. But all of this Swiss franc excavation is going to go somewhere else. The pound this afternoon, if that pound interest rate comes out at the 5.5, we could well see a massive spike come back in that. So we'll see. But they have factored in potentially the 5.25. If that is the case and we get the 5.25, it could be a massive spike. Yeah, and this is why you don't always get the reaction in the news that you are expecting, because you don't know what the market's positioning is. The market will move based on the positioning it has to make money. So if they've positioned for a 5.25 and we get the 5.25, we're going to get a massive spike. If we get a 5.5 and they've factored in a 5.25, we'll get a double-sized spike. Right? You can never tell, and this is the thing. This is why news trading doesn't work, because there is no way of forecasting which direction a news event is going to take the market, because you don't know which way the market has anticipated. So, Joanna, CAD Swiss killed me. Oh dear. Franco, yes, I've taken the camp. Just read in prop rules, grid is not allowed. Yeah. Afternoon, Astro. Yeah, there's most prop firms don't allow grid trading and they don't allow martingale. But you have to read what their definition of martingale is. There's two definitions of martingale. The official definition is martingale is a double lot size. That's because martingale is a gambling system. Yeah, that's where martingale originates from. It's a Chinese gambling system. So what you do is you take a 1, and then if that doesn't work, you take a 2. And it's not a case of take a second, take a third, take a fourth, 1, 2, 4, 8. It's a case of take the first trade with a 1, that gets stopped out. The second entry you take is a 2, that gets stopped out. The third entry you take is a 4, that is also martingale. So you need to be careful with prop, because adding to a losing trade to dollar cost average into it is allowed if you do not increase your lot size. So if you take a 1, a 1, a 1, a 1, and a 1, they don't have a problem with that. If you take a 1 and a 1.01, some prop firms class that as martingale. Others don't care about that. They're interested in 1s and 2s and 4s. They class that as martingale. So you've got to read the prop firm's definition of martingale or ask. Some of them will not allow you to take a 1 lot and then take a 2 lot and then take a 4 lot on stopped out trades. That is also martingale. Yeah. So just got to be careful. The thing with prop, and I know people that have been caught out with this because they've contacted me about it. If you take a trade, so every time you take a trade on a different instrument, you're going to use a different lot size, because going long on the pound US dollar with an ADR of 72, using a stop loss there, for example, and an entry there, and doing exactly the same thing on the pound CAD, which has got an ADR of 103, you're going to use a completely different lot size on that one than that one. Now, if you take that trade first and stop out on that one, and then you take that trade with exactly the same risk, but your lot size is higher because it warrants a bit higher lot size to risk the same amount of money, prop firms have also cancelled people's accounts because of that. That's not martingale. That's using proper risk. You're risking a dollar amount on a movement distance, except the lot size is higher. So you've got to be careful with them. So many of these props are geared up in the terms and conditions to catch you out. In evaluation, they let you do whatever you want. When you get the actual funded account, if you read the contract, the rules are so dramatically different that you can't trade this news event. You can't trade that news event. Well, you didn't tell me anything about that in the evaluation. I was trading through news. If you made 50% of your profit during news, all of a sudden now you can't. what if your strategy revolves around news trading? You're stuffed, aren't you? So just got to read the rules. They're very, very, very different with every prop firm as well. And especially at the moment, obviously, with what's going on with my Forex funds, which there's still no news on. I don't know if anybody else has heard any news, but I haven't heard anything. It's going to be dragged out, that, I think. On the pound, maybe no move. Oh, yeah, I just read that one. CAD Swiss. Getting squeezed bad on CAD Swiss. Yeah, I'm in that as well. So I'll be taking another position on that one on the next reversal alert, which you're not going to get for a while. So we've got resistance coming up on that one. Wasn't great, that resistance, was it? So this was the closest resistance we could find that may be reactive, which is pretty much where we've tapped into now, 150 ADR on the CAD Swiss. So I'll be taking another entry on that one when we get a 5-minute reversal alert. At the moment, your reversal alert is going to be all the way down here. So we get a down candle and make a new high. The new reversal alert will be up there. So we'll mean revert that. But we're going to need to make a new high first. So that will be your entry. If we make a new high, that will become the reversal alert. The entry will be there. That will be where I'll be taking my next one. But if you are in pain, get out. Yeah, take a loss. This is no position trading is no different to any other type of trading. You take a loss. If things are going really badly, you take a loss. Nothing you can do about it. Just closed long on US dollar CAD. I got out my long on US dollar CAD yesterday. So that was a nice, quick, easy, straight in, straight out as well. Lots of good, easy trades over the last couple of days. Unfortunately, lots of squeezes as well. Also purchased a Fivers account, outro. So far, spread amazing and slippage minimal. The trouble with the Fivers, there's lots of troubles with the Fivers. But, I mean, see how you get on with them. They've been around a long time. So, but then again, Fidelcrest have been around a long time. We've got people in Telegram saying that they've been waiting for payouts for 4 or 5 weeks. The whole prop industry at the moment is in an absolute mess. So just be careful with everybody you go to in prop. Franco, my Forex fund sent me an email. They say they're waiting for news too. I've had no email from my Forex funds. They owe me money. I'm waiting for a solicitor to go, hey, let's sue them. And I shall be doing that. Trading Nut just interviewed the CEO of Blue Guardian. He's an affiliate, Trading Nut, so can't really take anything an affiliate says. With, you know, they're pushing Blue Guardian. He's been paid basically by Blue Guardian to do an interview. So anything that is said is, mind you, that's the same with all media, isn't it, really? Yeah, let me know what they're like, outro. I've told you with Fivers. I've been funded with Fivers. I didn't get to payout stage with Fivers. I got funded with them, but didn't get to payout stage. So I know they're pretty good, but there's lots of problems with them with trading conditions. So yeah, you've got very small leverage with them. You can't use EAs. You've got very small leverage. There was something else with the Fivers, which was a little bit constrictive, but they've all got rules. They've all got rules. US dollar Swiss just hit ADR, weekly range, yeah. So US dollar Swiss weekly. But again, you know, as I said, I would pay little attention to this at the moment. We haven't had, since August, the summer trading, we have obviously had contracted ADRs and contracted AWRs. The whole of September, we still haven't had any expansion. Yeah. So this move that we're seeing with FOMC yesterday and now with the Swiss franc is the first expansion move we've had for 7 weeks. So you've got to take these with a bit of a pinch of salt, because the normal weekly range on the Euro Swiss is not 86 pips. Yeah. Average daily range on this is not normally 37 pips, right? So these are going to light up like Christmas trees for around about a week when we come out of summer trading. It's always the way. We haven't come out of summer trading. Well, although we have come out of summer trading, the market hasn't moved outside of its normal ranges that we had in August, has it? So these are the first moves. So you've got to take these with a bit of a pinch of salt. You're going to see much bigger extensions on these because everything is so unbelievably contracted and has been for weeks. But, you know, not a lot you can do with it, really. Look at the US dollar Swiss daily. Yeah, I mean, look at the movement. That's all you got. Yeah. 2 weeks. For 2 weeks, you've had that. In September, this is. August that's contracted in August. September's been worse, look. Just awful at the moment. This, as I said yesterday, I won't harp on about it, but I've never traded through anything so flat in my life. Just painful. MT5 only, Mumo. That's right. That's the other thing about fivers is it's MT5 only. I knew there was something else. There's nothing wrong with MT5 only, obviously, but it's just I don't like MT5. So for me, that was not a good selling point. But I can't use MT4. But let's see if the crazy opening on the indices is still happening. Not a lot. So we're long on the DAX. Gap fill. I'm absolutely shocked at the speed of move there. This euro has had very, very little reaction. I'm quite shocked as to how little the euro has reacted to that Swiss franc move. That's all we've had. I was expecting a much bigger move off the euro on the Swissy news. Maybe we're waiting for the pound. I don't know. But it's the euro Swiss has moved, but I would expect that to move a lot more. So obviously the DAX hasn't moved either. So upside, obviously, been watching that gap fill. That's only a very small move though to that gap fill. So we'll see if we can get a bigger move to the upside. But I'm happy to lock that in. I managed to make decent profit in the end yesterday. So had a bad break on the DAX yesterday and took a little bit of a loss on the DAX. Didn't trade the NASDAQ yesterday. The Dow, I had a lovely short play, which I made a load of money out on the news. So I was in profit. When the news came out, I was in profit. I had trailing stops kicking in on these 3 positions in case it spiked, and it basically dropped. So it hit my target, which banked me, I think it was about 8K. So it paid for the DAX move in the morning and made me money, which has covered the loss I made on position trading yesterday. So it's good. I didn't trade the S&P. Oh, no, I did trade the S&P, but I got out the S&P before the news, which I shouldn't have done, because if I'd have stayed in the S&P, I'd have made... that would have been 8.5K. I didn't. So nothing I can do about that one. If only we'd known, eh? If we could go back in time. That bloke that invents the time machine is going to make a lot of money. Outro, leverage is 1 to 30, which is fine. Yeah, so if you're just using intraday trading, 1 to 30 is no problem for leverage. It can get a bit difficult on the indices. If you're trading all indices in the afternoon in the US, that 1 to 30 leverage gets eaten up very, very quick. So if you're just trading single instruments, so it's not a problem. Am I still long on the pound CAD? Don't think so. Yes, no, I am. Sorry, yeah. So first position is there on the H1. You can't see it. So first position was on the H1 RSI extension. Second entry was on Wednesday and did drawdown control on Wednesday as well. So average is there. So again, you know, the only thing that's going to save me at the moment from a catastrophic month is the pound this afternoon. If we get a negative move on the pound, I'm going to cut positions and just take a loss for the month and wait for this thing to reset. So I think the market, if the market is going to start to get some volatility coming through it, it needs a week to get it moving and get it out of its system. Until then, you can have ADRs all over the place. You can have weekly ranges hit very quickly on Mondays. You can have RSI extensions all over the place. But they could well be the start of moves. So we'll see what happens. If the pound can rally today, it's going to save my month. If the pound doesn't rally today, nothing I can do about it, unfortunately. So shift in fundamentals. However, if you look at the actual fundamentals at the moment for the pound, it's still massively range bound. There's still no fundamental advantage. It's a sell, the pound US, but it's only a -4. And that is only a -4 because retail are all long in it at the moment. Yeah. So if you take retail out of the equation and say that they're neutral, that's a -2. Fundamentally, there is no advantage on the pound US dollar in either direction. So, if you look at COT, they are slightly long pound US dollar as well. If you look at the COT report, the market is still positioned long on the pound and short on the US dollar. So, or shorter on the US dollar. So, this market, it ain't right at the moment. It's not, just not moving normally. But, you either adapt or you pause. And I don't really want to adapt because I think we're going to go back to where we were at some point soon. Just taken too long to get out of this summer trading pain in the backside, isn't it? Oil, Philip. So we looked at oil yesterday for a pullback, which has started. So we had a reversal alert on Tuesday. Wednesday, yesterday, we had the oil inventories. Oil inventories rallied, and then we dropped on the US dollar move. So far, looks like we're pulling back. So we've just filled that propulsion gap, which was where we previously tested and where we got the bounce. There's two moves at play here. So the first move was that one there. So need to zoom out a little bit. So that leg that broke the high, we were looking for a 38 retracement pullback, which was here for a bounce long, which we got. So if you measure that move and the 38 pullback, measure that move, if we're going to continue in the same vein, which we should do because supply and demand would dictate that we are still going up on oil, $95 a barrel being the target. We're looking for a pullback on this move, basically. So if you put the fib up there and look for a typical retracement being 38.50 in a shallow pullback, we're looking somewhere down here and here. So this high is just below the 50 retracement. So if we get a shallow pullback, that's ADR today, which is this accumulation. Yeah, so we're pretty much where we bounced there. So if we may find buyers somewhere in this area today, which would be ADR. That would be a shallow pullback. If we're going to get a deeper pullback, we'll be looking to pull back into the previous month's high, which is this contracted area here. So those are the two levels that I'm watching, which is basically 225 ADR and about 125 ADR on today's move. You're not going to get a 225 ADR move on oil. I mean, you have to have something announced about oil for that to happen. And if it did move 225 ADR to the downside, there's probably a reason why, and you probably wouldn't want to be buying it, because if oil collapses that fast, something's changed. Either OPEC have ordered Saudi to increase production or something, or I don't know, something else has happened. So that's oil. So we should be looking for a continuation on this pullback. Obviously, it may not do that. 23 retracement is a very shallow pullback in a trend. So, but we don't often see 23 retracements. They tend to be part of accumulations. So we could push and accumulate. But that's the area I'd be looking for. So somewhere around about 86.5 a barrel down to 85 to 86.5 is kind of where I'd be looking to buy. Assuming nothing changes. We haven't got any OPEC meetings scheduled, I don't think. There's nothing coming up. So, no. Sorry, we haven't picked apart thingy yet, have we? I've just realised we've got the SMB. We've got the SMB announcement, press conference at some point. Riksbank, the currency hedging will begin on the 25th of September and will be fully complete within 4 to 6 months. Not sure what that means. Right, so let's quickly whiz back. Sorry, I was literally just catching up on chat, and then I was going to go into Fed, and we've been talking for ages. So, oh, what the hell was that? Right, so let's go back to Powell. So there's the interest rate decision that came out yesterday, 5.5. What the hell's going on? Financial Juice is having a funny 5 minutes at the minute. Keeps repeating news and all sorts of things. What are you doing? Let me refresh. Something not right there, is there? There we go. So just going through through Powell's talk yesterday. So they are expecting end of 2026 the rate to be dropped down, basically. So 2025 to 3.9, which is previously 3.4. What the hell is going on with Financial Juice? So basically, soft landing, not quite as soft as they thought, basically, is all you can read into that. End of 2024, dropping down to 5.1. So basically what they're saying, what the Fed is saying is these rates that we've got, these 5.5 rates or 5+ rates, we should expect to see them for a good 12 months. Pretty much what the Bank of England has said, what the ECB have said as well. We will possibly start to reduce rates at some point, Q1, Q2 next year, if the data says it's okay, but don't expect us to drop it fast. We're going to come down in very small increments because we need to, because obviously inflation has been very stubborn, blah, blah, blah. So there's nothing really new there. The dot plot basically is just showing more of a decline in rates. So this is where we are at the moment, sitting up at 5. This is dot plot basically just shows you the likely outcome. So what you do is there's more people saying it's going to be somewhere around here. There's more people saying it'll be there. There's more people saying it will be there. So this changes every time there's a rate announcement, and it's basically what they call the midpoint target, which is basically, as an average, we should be looking at 5% in 2024. We should be looking at 3.5% in 2025. And in 2026, we should be back down to 2.5%. Bear in mind, we've been sitting at 0s and 1s during COVID. That's still bloody high from what we're used to. So basically doom and gloom for everybody, as usual. But a little bit less doom and gloomy than they thought before. I've no idea why Financial Juice is doing this. This is something, they're having a bit of a problem today by the looks of things. Unemployment forecasts are forecast to come down. So again, that is bullish for the US dollar. The Fed will continue the same pace of reducing Treasury and blah, blah, I don't need to worry about that. Lower rate cut odds in 2024. So again, more chance of us dropping the rates in 2024. They were forecasting about a month or two ago that they were not going to touch the rates. We would be stuck at 5 point whatever the terminal rate was for the entire 2024. Now they're saying they might pull it back a little bit. But in the same breath, they're saying that we need to proceed carefully. Normal wage growth, I'm not worried about wages really. Process of getting inflation down to 2% has a long way to go. So it's all very woolly. Everything that came out yesterday, I was watching this come up by the minute last night, thinking there's nothing in here that gives us any indication as to what you're going to do next. They're prepared to raise rates further if appropriate. We will look at the data and see what the data says. So yes, we're going to sit at 5.25. We're going to sit at 5.5. We're not going to increase rates unless the data says that we need to increase rates. So what are you going to do? Yeah, the market needs guidance to be able to position itself. It can't position itself if it's got no clue. The Fed normally gives an indication. They haven't for quite a few months now, which we know, and they're still not doing it now. They keep saying the terminal rate is coming, and then they keep retracting that and saying, we don't know, we might have to do more. Same as Bailey's been saying, and Lagarde has actually said as well, but at least the Europeans are being a little bit more, it's unlikely. Yeah, they're giving us a bit more of a clue, aren't they? The Fed, very, very woolly. So the upshot of everything yesterday was we were expecting things to do that. What we actually got was the possibility of things maybe going a little bit more like that. So everything in here was a little bit more bullish than we thought it might be, but still very woolly. So the market obviously had a big, strong reaction to that, but as you can see, hasn't really made an awful lot more movement off of it so far today. So we need to see what happens today. If we get a complete retracement on all of the US dollar moves today, and it wasn't a big move by any shape or form, was it? So, you know, today's move is big on the Swiss franc. Yeah, look at the move we had on the US dollar CAD, for example. ADR is 70. The move we got was 82. Whoop-de-doo, we just about hit ADR. Don't forget this market is contracted as well. So the move is actually contracted. It's not a big move. It looks big if you're in pain, which I am at the moment on the pound US dollar. So we got an 88 move off of a 72 ADR. Again, about one and a bit ADR. That's all the move was. So if the market undoes this today, we know that it's business as usual. There is no guidance up or down, which we know we haven't got. So everything we got yesterday, and we should really be used to this now, but we always hope that we're going to get some guidance, is basically, I would not call soft landing a baseline expectation. Complete opposite of what they said before. The soft landing looks like it's going to be achievable. Now it's not. Now it is. Now it's not. Now it is. What do you expect the market to do with that? Can't do anything with it, can it? So all we're getting at the moment is that. Because the market's got nowhere it needs to go with any currency. So we're stuck. And this is the problem we've had throughout August and September, is we've got no idea, because they keep saying we're going to stop and that's going to be the terminal rate. We're not going to go anywhere and then it's going to come down. All we get is, actually, we're going to remove that line and we're not sure. Yeah, the market can't use this to. So all it's going to do now is predict, I think, freezes. And that's what we're kind of tending to see. So we're at now 5.5. We should probably expect a 5.5 next time unless we get anything else. So the market's not really got any reason to be long or short. So when you're looking at currency pairs at the moment, the only thing that you're really going to find that's going to happen is these are going to move on news, and then we'll get gradual movement like that, which is, you know, not very useful for anybody. We need volatility to be able to make money out of the market. So nothing exciting that I could see in here personally. I've read a couple of other Goldman analysis and interactive investor articles, very much the same sort of opinion. The market really hasn't got any guidance as to what to do now with the US dollar. So it's kind of business as usual. Nothing to be read into it in any positive or negative stance. ECB is talking at the moment. We're on 9.11, so this is coming through now. We need to start cutting rates when the inflation forecast is consistently undershooting the target. So again, same thing, data driven. When this number here is a negative for 3 months in a row, we will consider changing that. So if we get what we're getting at the moment, which this is the euro here, we get a flip-flop whereas we get a negative 0.1, then we get a plus 0.1, then we get a negative 0.1. All the time that's happening, that will never change. Yeah, the market has no reason to make any adjustments. So the euro will do that. And if you've got the euro doing that, the US doing that, and the pound all doing that at the same time, because we're all at what we think is terminal rates and inflation isn't moving, you get a flat market. So it wasn't good last night from the Fed. So, and ECB obviously looks like it's doing the same. We've got Lagarde speaking later this afternoon, so we might get a little bit more guidance out of Lagarde later. But I think we've still got some rocky months ahead with the markets. I don't think there's these sorts of grindy squeezes, I think, could become more prevalent. So I'm going to do an analysis of this particular trade. And I'll probably do a video on it, basically, and just look at opportunities to exit. I've had 2 exits on this, which I didn't take. So I think maybe it's a case if you just need to start taking exits quicker on things at the minute. But I've been trying to let things run, unfortunately, which hasn't helped with this one. But there have been exits on this, which I've neglected to take. So I need to do an analysis and see where the exit points were, see where the averages were on the positions. See, there's no exit there. That was a break even. That was an exit. You know, just didn't take them. So wrong thing at the wrong time. But yeah, so upshot is on the Fed, we need to just wait and see. So we're either going to get on this US dollar, we're going to get a accumulation break. Yeah, so strong move, accumulation, continuation, or we're going to get a retracement. So at the moment, I think what we're going to need to do is wait for, obviously, the euro rate to come out. We've had the Swiss rate. So as soon as that pound rate, rather, is out, we should see everything kick off this afternoon. We've got all the PMI figures coming out tomorrow as well. So there's a lot of news still to come. Once this is cleared, this news, we've pretty much got a light week next week. We've got bits and pieces of stuff in there, but it's a much lighter news, well, fortnight really, coming up until non-farm payroll. So once this week's out of the way, I think we'll probably get some volatility, fingers crossed, coming back in next week, and then that will help reset the RSIs and the ADRs and normal market movement. But very tricky. Morning, Ramesh. Thanks for subscribing. Harold, I'm running 2 accounts with the same strategy, M5 hedge, and the broker one is demo and the other one is a live account. My demo account has managed to exit the CAD Swiss and make consistent profit, yet my other account has massive drawdown and a bad loss. Same broker. You must either have different settings or different data. You can't have the same EA doing different things unless you're using you need to obviously change the if you've got different amounts in your account. Yeah. So if you've got 2 set files exactly the same running on 2 accounts which are exactly the same, and the only difference is the monetary amount in them, i.e. you've got one with 10 grand in and one with 5 grand in or something, you obviously have to change these settings. Close all when money in profit. Yeah, if you're using that input and you don't change that input, you're going to get totally different results, obviously. So obviously just make sure you've changed the monetary exit criteria. Yeah, so I mean, this one is set up for $1,000 account. If you were trading this on a $10,000 account, you'd set that to 150. If you were trading a $20,000 account, you'd set it to 300. Yeah, so just check your inputs. That will be the only reason. Or different data. Yeah, you can have 2 accounts with the same broker. As I've proved in here over the last week many times using the opening range breakout strategy, I've been triggered on trades on this account or not triggered on trades on this account. And the MT4 over there, which is the only difference between these two, is one is a Robo Forex CCN, one is a Robo Forex Prime. That's triggered a trade, that hasn't. Same EA, same data, same time, same everything. Only difference is spread. Totally different results. Don't forget, spread doesn't just change the entry of your the price you get entered at. Spread also changes the price data. RSI is different. Moving averages are different. ADRs are different. Yeah. If you've got spread and one broker spreads like that at the high of the day and another broker spreads like that at the high of the day, that candlestick is way bigger. Yeah. Over a period of time on a 200 moving average, you've got 200 candlesticks with different prices. That 200 MA is going to be in a different place. And that is the same for all indicators. Broker data will make things different. Whether or not you've got a gap. Yeah, you can have two brokers offering two different account types. One will have pre-market data on indices. Another won't have pre-market data on indices. Totally different ADRs. Yeah, because if that data goes up to there, and on this account you don't have that data, the high of the day is in a totally different place. Got to be careful. Always backtest on the accounts that you are going to trade with the data from the broker that you're going to trade with, so that you know you should get the same results. Afternoon, Anna. A 5% of DD on the CAD Swiss, still looking out for that golden daily pullback. Yeah, that would be nice. So we haven't had a new high put in yet. So there's your propulsion move. We haven't put a new high in since that sell candle. So that is the first batch of sellers that we've had. And there we go. Just broken that low. So this is the opportunity. You fade it. Risk reward is about 2R, or it's going to rally. One of those two things is going to happen. All depends what the market's planned, whether this is a knee-jerk reaction. Yeah, all news spikes are knee-jerk reactions, basically. So when you're a bank or an institution with a position, you will have a, same as us, we will have a position on a trade. If, for example, this had come out as a 2.25 instead of a 1.75 today, right? What would have happened is this would have spiked that direction, okay? As position traders, me personally having two positions on this, my TP's down there, what would happen is I would be getting out of my position down there. Yep. When I'm out of my position, I don't need to worry about it anymore. So then the market will do what the hell the market likes. But the move is a knee-jerk reaction. It is the banks receiving information which is positive or negative to their individual positions and them either adding or exiting a position. Once that move is complete, they will then analyze what's gone on and the analysts will tell them what to do. If the analysts now say this Swiss franc drop shouldn't affect our overall positions, they will pull back all of those orders and this will just do an A-shaped recovery. Yeah. So this knee-jerk reaction has got nothing at all to do with what this is going to do next. It's what the banks needed to do at that point in time based on their positions and what their forecasts on that result were going to be. Once the analysts have got the data and scorecarded it, they will tell the traders to change direction or add into that direction because it will affect their balance. Don't forget, they're doing the same as us. There's a portfolio of currencies. They're trading everything. And this is one small part of that entire portfolio. They will have hedges on, they will have positions on, they'll have average prices in there, all sorts of stuff going on. So this is why you don't get necessarily continuations. Yeah. We get the big move down. Oh my God, that's catastrophic. Hang on a minute. The analysts say, no, it's not catastrophic. We actually want to be doing the opposite. Yeah. But that you don't, the analysts can't make that information available immediately. So the immediate reaction is take that profit, run, come back, change direction. Yeah, so this is why we get A-shaped and V-shaped recoveries on news events. So we'll see what happens with this Swiss. Just because it's spiked doesn't mean it's going to rally. So if you're obviously short on this, just get into an extra position and manage your position. Business as usual. And US dollar Swiss. You're in US dollar Swiss. You shouldn't be in US dollar Swiss with anything. US dollar Swiss hasn't had a signal for 2 months. US dollar Swiss. This has just been doing that. No movement. Yeah, that's the only difference, and lot size. Yeah, that's all that would affect it. So there's nothing else that can affect that, Harold, apart from that. I mean, if one is closing out and the other one isn't closing out, it's because the criteria for the close haven't been met. So if it's taking trades and not closing, you can tell. Because don't forget, you've got the dashboard on the Market Reversal Alerts EA. You've got the dashboard, so use the dashboard. That will tell you all the information you need to know. And just turn on everything, yeah? So if you turn everything on the dash, no idea what this is set to do. It's on the DAX as well, so it's unlikely to do anything exciting, but use that dashboard. So if you've got targets set at monetary amounts or ADRs, when it kicks in, there we go. So use the dash, because the dash will tell you what your profit is in money, what your profit is in pips. It tells you what the current ADR is. It tells you the distance between the trades. It tells you what the next lot size is going to be. It tells you every piece of information you need to know. So if you find that you've got an unexpected result and you're thinking, why is that not shut? Look at this, and then just open the settings and just double check what it is. So if you've got long profit in money set to 25 and that is sitting at 35, there's something wrong. If you've got it set to ADR, i.e. the entire position has got to be in a quarter of an ADR in profit, that will tell you if you are in a quarter of an ADR in profit. So 1409 is the ADR on this. So you just divide that by 4. That will give you what the quarter of an ADR is. And if that number is lower, don't forget this is an average on the entire position. If you've got 3 positions on, it's an average on the position. And obviously if you've got lot multipliers running, that average price is going to be different. So just check it. It's very difficult to analyze why something has or hasn't done something, because there's a million variables, isn't there? But use the dashboard, and then that will hopefully tell you what the problem is. Peter, I've just learned a lesson. Closed ADR strategy got me into trouble. 25% drawdown due to the Swiss franc. So we'll now focus on H1M5 and ORBs. Yep, too much exposure will kill you. Oh my God, look, HelpyFX is back, everybody. That's 2 days in a row. HelpyFX is here. HelpyFX, free Forex signals last week. Love. Hello at Forex Leah. And thanks, mate. You shared. I Googled it to find, and I joined their free signal group. And oh my God, so profitable, even with some losses. Thanks again for you share, mate. I hope God bless you. Thanks. You know what? These people are so unbelievably thick. They can't even program their marketing bots to talk English properly. I'll report them, but it won't do any good because there'll be a new one back tomorrow. Anyway, HelpyFX, love them. Why can't I scroll on my chat? Oh no, they've just broken my chat. Oh my God, they've just broken my chat. Brilliant. I can't scroll on chat, so I can't read anything. That's good. Let me move it over here. One sec. Now I can. I'm going to have to look over here. Where did I get to? Baggy. Can't believe they've broken my chat. Hope you're well. With regards to the Japan, does Japan always intervene? As surely they can't always do it, as it would cost billions. Yeah, they do. It makes them money short term. So when the Japanese intervention comes, it makes them money. So this move, it's a double-edged sword. It's a gamble. It's a risky move. It's their last resort. Yeah. So the vast majority of Japanese trade is done with the US and is priced in US dollars. So the higher the US dollar yen goes, the less money the Japanese make when they're exporting all their goods over to the US, to Canada and everywhere else, because every export from Japan pretty much is priced in dollars, whether it's going to the US, the UK, Europe, or wherever. So when the hedges that they have on transactions get to a level where they're thinking, we're going to make virtually nothing out of this, even though we've hedged on the US dollar rising, they have to basically pump the market by typically just buying a load of yen, which rallies the yen and makes a massive spike. It drops. What tends to happen after that, and the desired effect, is that the market gets a slap across the thigh, gets hit financially, and goes, crap, get out of those positions, which makes them flip long on the yen because they were short. So the desired intervention, which the first one you can see is there, which is a 600 ADR move. Look at ADR, where we are now. That's 225 ADR, 400, 600. So when the intervention comes, you're going down there. Yeah. So if you're short on the yen, do not use a TP. Yeah. Short against the yen, rather, i.e. you're short US against the yen, you're long the yen. So the idea is that it kicks the market into touch. Last time, they've done this many times over the years. The last time this happened was September last year. They warned, they warned, they warned again, and then they did it. They've warned and they've warned. I've just shown you overnight. They've warned again. Tomorrow, we've got the Bank of Japan monetary policy statement as well. If this US dollar gets too high, they have to do something about it. If that first intervention fails, as it did in this case, they will warn again. The second one worked. The third one was a shot in the head. Yeah, double tap, right? We told you, stop devaluing the yen. You're not doing it. Bang, now you are. Yeah. So it's just that you get that flip. Sometimes it takes one. Sometimes it takes a warning shot. Right here at 145, when we were getting to here, every day I was reading the news out, as I do every day and have done for years. I was reading the news out saying, oh, look, the Japanese are monitoring FX movements. Oh, look, the Japanese are saying if FX movements keep moving as they are undesirably, we will intervene. Not in so many words. Oh, look, the Japanese are saying it again. This is now a week they've been saying that. Bang, market pays attention, because last time we got to 145, what happened? They lost all their money. So what did the market do this time? Take profit on the move rather than get stung. Yeah. We pushed back to that level. Japanese started saying again, oi, stop pushing, stop pushing. They pushed up a little bit and they didn't go any further. Every time there's a push, the Japanese come out and say, FX moves are undesirable, blah, 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 blah. You won't know this is coming until it's happened. There's no warning. And it does not happen in the Asian session. It typically happens in London or the US when there is more liquidity in the market, where they can make the biggest impact and kill everybody as fast as possible. Yeah. Every single one of these moves is 600% of average daily range. Yeah. ADR on this is 78. ADR there is 576. Second intervention, 640. Third intervention, 530 odd. Yeah. When it comes from there, you'll be looking at being somewhere in the region of there in 1 4-hour candle, typically. Yeah. So as it very rarely won't have the desired effect. Yeah. Because it's a shock to the market. Everybody that's long is liquidated. Everybody that sees that move waits for a pullback to short it. And it generally, it's like, you think of it like a spluttering engine. That's the, we kicked in and now we're going type move. That's what the intention is. Sometimes it doesn't work. Sometimes it does. It all depends on the market state, but it will work. It always does at some point. And they have the power to do it multiple times. They never say they're going to do it though, because it's not desirable. You know, if every country did this, this whole marketplace would be an absolute mess and nobody would know what's going on with anything, would they? So it's not something that the market likes to see, but you can understand why they do it. Imagine if you ran a business and you traded in the US dollar, and the US dollar was gradually going down and down and down and down and down and down and down. It got to the point where you were buying your stock at a higher price than everybody was willing to sell it at. You've got nothing. You can either close your business or you can do something about it. You can go to your suppliers and say, if you don't drop these prices, I'm never going to buy from you again. And I'm going to tell everybody else not to buy from you. All right, we'll drop the prices. You're back in business. That's basically what the Japanese are saying. They've got lots of mechanisms to be able to do it. Don't forget, the Japanese are also always running at negative 0.1 interest rates. 6 years, we've had negative 0.1 interest rates on the Japanese yen. Yeah. So their mechanisms on how they operate are totally different to everybody else's. They run everything differently. So they're a massive export community. The Japan export is just export, export, export. Yeah. So they have to have this at the right price, otherwise they're stuffed, basically. And at the moment, obviously, with what's been going on with the US dollar, it's getting hard for them. So, but will it happen? Don't know. When will it happen? Don't know. I'll be sitting in here one day and I'll be going, what the hell? That'll be when it happens. Everybody will know at the same time, because what will happen is you'll have a massive 1 hour candle, which will go down 200 or 300 ADR, and you will have no idea why. There'll be no news. There'll be nothing. The banks will all have alarm bells going off everywhere. They'll be running around like blue ass flies trying to figure out how much money they've lost, and eventually they'll just go dump it. It's a bit like, what's that film? I can't remember which film it is. Big Short. Sell it. Sell it all. When? Now. Gone. That's basically what happens. We're all got to lose money at some point. Banks lose it too. So I'm going to have to look over here because LPFX have broken my chat. I wonder if I refresh that. Oh, there you go. I've refreshed it. It's working now. Now I've got to try and find out where I was. AZ, if you look at the daily on the CAD Swiss, looks so ripe and juicy for a collapse. Yeah, so this is the support, the resistance we drew in, wasn't it? Yeah, so yes, I agree. Coincidence? All right, could say that. Difficult to tell, isn't it? But I mean, this, you know, these moves that we're getting, as I say, these squeezes that we're getting are just relentless at the moment, aren't they? Oil prices massively helping this Canadian dollar. Now oil prices coming down, we would, you know, this is the problem at the minute. You can see, you know, I've been talking through this every day for years, how the fundamentals affect everything and how the CAD is affected by oil, etc. We've had oil rallying now for weeks and weeks and weeks. What's the CAD been doing? Rallying for weeks and weeks and weeks. What's happened in the last 48 hours? The oil price has dropped. What's happened to the CAD? The CAD price has dropped. Unfortunately, the Swissy decided to chuck a spanner in the works. There's nothing you can do about this. If the Swiss hadn't have done what they've done today, this would be coming down beautifully and everyone would be going, oh, that CAD Swiss move was lovely, wasn't it? The Swiss have screwed you. Nothing you can do about it. Fundamentals drive the market. Swiss have changed the fundamentals. So whether that is going to be a move the banks want to continue or whether or not they are just exiting and reevaluating, we'll find out. 24 hours, you'll know. 48 hours, you'll know. Same with the FOMC. We're going to know if that FOMC move yesterday was legit or not. We'll find out today. If they continue that rally, they will continue that rally. We don't know because we don't know what their positions are. So, well, we can tell what their positions are. We know what the COT positioning is, and we know they're long. We know they're long the US dollar. Oh, there. Yeah. So, but look at the long on it. Yeah, it's 57% long, 43% short. It's not much, is it? They're not that long. They've been trying to get out of. They've been trying to weaken the US dollar. They just keep getting the wrong message from the Fed all the time. So, you know, they're not at any point, any negative news, as I keep saying, if we get negative news, that US dollar will drop because the market isn't that interested in being long on it at the moment. Yeah. So it's gonna happen at some point, but all the time the Fed keeps screwing it. Nothing we can do. Thought Feeder, on stream a few weeks ago, you talked about back testing and said to always use tick data instead of broker data. Just now you said use your broker data if you can offer any clarity. So what I mean by that is test on your broker data, yeah, to make sure that your broker data matches your tick data, basically. So if you've got, I mean, you're never going to get exact, but always test on your broker data as well, yeah, to make sure you get the same results as your back tests. But you need your broker data to match your tick data. So you need to adjust your tick data settings so that they match what you've got. Yeah. So in your broker data, you can change the offsets. You can change everything basically about it. But you just got to get it to match. That's all. That's all I mean. You're never. But don't forget, back testing is never going to happen again. Yeah, everything you do in back testing is just what's happened in the past. What's happening in the future is totally different. So back testing offers you best case scenarios, optimal settings on what has happened. If you can get a back test that runs over different years out of sample and still produces decent results, you know that in the future it's got a very high probability of doing it, as long as your candles are as close as they can possibly be. But the difference between one candle high here and the other broker giving you a high here will put your RSI out by points of percent. If something gets to 24.9 and you've got it set to 25 to take a trade, one broker will give it, the other broker won't, because of the minute differences in spread and candles. Nothing you can do about that. You know, but those minute details are irrelevant if you're doing system parameter permutation tests. This is what system parameter permutation tests are designed to do. If you've got a moving average you're using in a strategy and you're using the 20 moving average, yeah, and you've got a system that generates a profit using the 20 moving average, you need to test exactly the same system with a 19, an 18, a 21, and a 22. Yeah. System parameter permutation. So different permutations of the same indicator in a strategy. If it still produces a profitable result over that, and that, you know it doesn't matter if there's a variance on your broker. Because if they all produce a profit, it doesn't matter whether your broker is exactly using the same number on the 20, because you could have used the 19, the 18, the 21, or the 22 and still got a profitable result out of the strategy. Yeah. Which is why you need to do system parameter permutation testing. But your broker data's got to be as close as possible to the tick data you use to test. In the fact that if you were to run a test on, and the way you do this, very, very simply, is you pick a time range here. Yeah. Go and get a 5-minute or an hourly chart and visual back test. So you run a test over a period of time, whatever it may be. And you only do this for a couple of days. Yeah. So you just run a couple of day test, whiz through. When it loads, I should have chosen a different EA because this one's very slow to test. Yeah. But stop that there. Right. Look at that chart on the DAX and put it next to your DAX from your broker, right, at the same period of time. So go and find that date, the 3rd of January, whatever year it may be, find that exact time period and look at these two and eyeball them. Is that exactly the same as that? Is that exactly the same as that? Was that price there exactly the same as that price there? At that particular time, is it almost exactly the same candle painted? If yes, you can rely on that tick data to be as accurate as possible to your broker data. If that data does not match that, that backtest is never going to happen here, is it? That's what you've got to do. You just got to verify the data. You've only got to do this once. Verify that the settings you've got in tick data are the same as roughly pretty much what your broker's got. And as I say, if your broker doesn't give you pre-market, but the tick data does, that's going to be different, isn't it? So you need to find a different one. So if using Dukascopy data doesn't give you X, use Alpari or FXCM or FX Open or Darwin X. All these are very, very good data suppliers. But find match. That's all I'm kind of saying. But it's never gonna be 100%, is it? Can't be. It's 12.5 for the 5K account, 50 for the 20K account. Oh yeah, the monetary amount, yeah. On one of my MT4 charts, propulsion gaps are showing on M5 and H1, but not on M15. Pass. I know the answer to that one. No. The only thing it could be is Mumo, if you've got a new, if it's a new broker account, what you will find is you may not have enough data. So if you're using a look back of 2,000 candles and you haven't got 2,000 candles of data loaded on M15, it won't be able to calculate that. So you might need to load data or just wait and your platform will be downloading in the background. That's the only thing I can think of. I can't think of any other reason why it would only paint on. And also in your indicators list, which I very much doubt this is the problem, but just make sure it's set to all time frames and you haven't, for some unknown reason, got it set to everything but M15. Other than that, I don't know. Right, I think that's it. I think I'm caught up on chat. I am. Fantastic. So DAX stuck in hedge. This is not going anywhere today, look. Yeah, that's the 15-minute opening range. That high, that low. That is today's price action. You see what I mean when I say I just want to reset September? September, August was okay. I got through it. I was on holiday for some of it. That's fine. I didn't make as much money as normal. No problem. September, just want it gone. October the 1st, reset, start again. New quarter. September is the end of a quarter. So we're on the 21st now. I expect at some point next week to get some dramatic movement coming in because there will be an end of quarter sell-off. There'll be reporting periods coming up. They'll need to move the market to get positions finished, profit in the bank so they can report to the shareholders, etc., etc. So we will get some movement next week. I know that. But I'm hoping after today's news, we're actually going to start this thing back to normal because at the minute, this thing's just like hell. The rise in energy prices does create an upside risk to inflation. Really? Teachers to suck eggs. Japan's real effective exchange rate falls to lowest in 53 years. Not good. They're going to do something about this. Right, so obviously watch everything today from the Swiss franc. We are starting to push back a little bit on the Swissy. We're not going anywhere. So this is either an initial knee jerk. We're going to leave that propulsion and we're going to run like hell. If that's the case and you are short on this, you may want to think about getting out of some of your positions, or just closing it, walking away and saying, screw you, Swissy, I'm not getting involved. But we are at a decent resistance level on that as well. Pound US dollar, as I said this morning, I'm looking at one last attempt on this. I don't think I'm going to get it on, unfortunately. So that aggressive drawdown control. I took 3 aggressive drawdown control positions yesterday with controlled risk. On the news, 1, 2. I thought there was a third. Oh yeah, 3. Swiss yen 175 ADR. So those were the 3 aggressives that I took on the drop, and I was looking basically for a propulsion bounce out. Didn't get it. We got a propulsion bounce down. So those were the 3 aggressives that I took yesterday. Those 2 aggressives that I had on before the news, which I covered in the live room, as I said, what I was going to do with them was I was going to move that one to break even, and I was going to move that one to that level, so I would take a loss on that one. As you can see, I got slipped, so I took more loss than expected. Added back on as we started to push back up again, and then I had a third down here in case we came back and retested that low and put in a W bottom. That didn't happen, so I stopped out on those. So that's basically where the losses come from. All the loss this month, pretty much all of it has come from pound US dollar aggressive drawdown control. After I've taken 5% loss on something like this, it's time to walk away. It's not happening. So today it either is happening and I will basically get aggressive on, and I will probably take multiple aggressives if we see a spike and try again. If that doesn't work, that's it. I'm going to shut it and walk away and go, screw you, pound. I'm not interested. So, you've got to draw the line. 2 months is long for a position trade. If you get to the hourly chart and you have to scroll all the way out to see your initial entry, it's too long. Yeah, I can't risk any more. This has cost me 10%. That's too much. So I'm off. I shall leave it. But we are at support. So, and typically you will find, if you go back and watch some of the previous drawdown control, aggressive drawdown control examples I've done in the past, when I get out, I can pretty much hand on heart say, every time I get out of a position with a loss, the next day it goes absolutely skyward. So if it does drop today and I do get out of this, long it, because I'm pretty sure you'll get a big move, and it's always the way. And the reason is, this is why they call it a squeeze. It gets to a point where you just can't stand it anymore, and you're squeezed so tight, you just go, I can't do it anymore. And as soon as that happens, the banks do that, because you're the same as everybody else. There's no one else that wants to now buy this thing anymore. So the banks have got no one else that they can sell to. Therefore, they go, all right, well, screw it, boys. Let's just take profit. And that is when it happens. Always the way, but you have to call it at some point. So mine is now. So we'll see what happens this afternoon. You'll find out. 2:20 this afternoon. I'll be back and we'll see what's happened in the news. So 12 o'clock today, pound Swiss. This Swiss franc still on the march, look. Still on the march. Making new highs. So US dollar Swiss now, you're just about to get the reversal trigger back down onto that low. So there we go. Go on, tick up. Yeah, so there we go. So we've broken up above that high now. So reversal alert is there now. 225 ADR. So yeah, so 12 o'clock basically is when the monetary policy statement comes out, and we find out whether we're going to get that 5.5 or that 5.25. And don't forget, don't read into the number. You don't have to look at this. It's totally irrelevant. The market will go where the market will go when it needs to. So whatever that number is, we'll see what their positioning is, whether they've positioned in this 5.25 or whether they've positioned in a 5.5. And depending on what we get there, we will get the positive or the negative reaction to it. So we'll see where we go. All right. So have a good one. Hopefully you can get out some of these positions. The DAX, I'm just going to manage. Plan for the DAX for me is the same as it was this morning. I not sure I'm going to get out of this one today. So it's probably a short down to the double bottom weekly. So there's your weekly support levels. Upside, I'm not going to take a gap fill short. I would look for a push further. So yesterday's high ADR is where I would look for. But looking at the price action today, this isn't going anywhere, is it? 12 o'clock today, we'll get some movement off of this when the rate announcement is coming out for the pound. Other than that, we're just going to rotate. So news, the Achilles heel of the opening range breakout is appearing, which is good because now we know. Right, have a good one. I'll be back this afternoon. Anything you need, let me know. I'll be in Telegram. Other than that, I'll see you at 2:20 this afternoon for the US session. Other than that, I will be back tomorrow as normal, 7:50 for Frankfurt, and we'll see how we go. So have a good one. Anything you need, see you in Telegram.